Good morning, friends. Welcome to this session on NPA prevention and resolution of stressed assets. Something very important, not only for us, but also for the entire banking industry today. Although it is being said that banks have been able to weather that NPA deluge that we had earlier, but still people are not very sure about the status of accounts which are not shown as NPA. And there is a lot of stress underlying in the accounts that we have. And these accounts, they need to be continuously monitored and seen to it that they don't slip into NPAs. So the topic of NPA prevention is very important. We don't allow that NPA to happen in the first place, rather than going at the later stage with the firefighting, things like that. So Dr. Farid, who will be taking this topic today, is a former executive director of Punjab and Sindh Bank and a Ph.D. in banking, and his thesis was also on NPAs on itself. So the right person to take up today's topic. So I'll request Dr. Farid sir to start his presentation. Over to Farid sir.
As Arvindji said, still non-performing assets is a critical issue for banks in India, more particularly to public sector banks. You are all aware that the income recognition and asset classification norms have come into work in the year 93, 94, 93. Since then, the interest earned is not being identified or recognized on the basis of accrual, but on the basis of recovery. And also, the asset classification was started in the same year to identify the credit risk in the advances portfolio of the banking industry. So in the year 93, 94, when these loans were first time classified, they identified the non-performing assets. So in the initial years, 3-4 years, there was a increasing trend in the non-performing assets. Then banks could, and slowly there was a decreasing trend in the gross NPA and net NPA of the banks. So this continued up to the first, during the first decade, even up to 2008. It was about roughly about 54, less than 54,000. Because September 2008 is coincided with the global financial crisis. Slowly, the NPAs were increased to 2,34,000 crores by March 2015. This September 2018 and March 2015 is important because during this time, the Reserve Bank of India has also come out with special dispensations. Whenever an account is subjected to restructuring, particularly CDR, that account was allowed to continue as standard assets. But in 2015, the special dispensation was discontinued. So since then, though there are different other schemes have come, fruitful results have not come, and the gross NPAs of the banks shown the increasing trend. This 325,000 of NPA has reached to an abnormal figure of about 10.4 lakh crores in 2018. That was the maximum level of NPA, peak level of NPAs in the Indian banking industry. Then there is again a decreasing trend. In 2019, it has come down to below 10 lakhs. In 20, it has come to 9 lakhs. In 21, it was about 8.36 lakh crores. Then in 22, about 7 lakhs plus crores. Automatically, the gross NPA ratios have also come down, and it has come down. It is, if you see from 2008, when it was about 2.2, 2.3, it has slowly increased to 2011, 2.4%.
So
Then,
your PPT
no, there
is
is no
not
PPT.
moving.
This is only a
Okay.
introduction. To 6% has reached to more than 11%, about 11.5% in 2018. And slowly it is coming down from 11.5 to last year it was at 7.3 in 2021. And now it is about 5.95%. No doubt there is a mathematically decrease in the NPA levels, gross NPA level. But if you go deep into it, there are two aspects we have to look into it. The government of India and also the banks are claiming that in the 2018 to 2021-22, they have recovered about 3 lakh crores. If you see, the mathematical equation will tally. 1040, they have recovered about 3 lakhs plus crores, 315. Roughly the figure is 7.25 lakh crores. Gross NPA of the Indian banking industry is a tally. But the fact is, during this same time of 4 years' time, the banks have written off about 8.3 lakh crores. It indicates that the banks have added 8.3 lakh crores of fresh NPA. If this 8.3 lakh crores would not have been written off, the total NPAs as of now, I am not discussing the stress assets which were not classified. I am taking as it is that the banks are perfectly classifying the accounts as per the norms. Then the NPAs would have been 15 lakh crores, but for this write-off. So what I want to impress upon you is still the non-performing assets and the stress assets is a critical problem for the Indian banking industry. In addition to this, in 2019 to 2021, due to pandemic, special dispensations were given, moratorium was given, restructuring was allowed, both from very big accounts above 1500 crores and above smaller accounts, even personal accounts. All the restructuring was allowed, and the accounts which were standard as on a specific date, that is March 21st or March 20th, whatever may be there related to the particular scheme. Those special dispensations has protected from the classification of non-performing assets. That means they have maintained the quality of assets only because of special dispensations. Its impact, in fact, estimated last financial stability report, not this year, last year, and so many studies that for March 2022 or September 2022, the gross NPA will increase abnormally. But in fact, for the March 2022, the NPAs have come down because, as I said, by maintaining the asset quality because of the special dispensation and also because of write-off of the big accounts. The write-off of the big accounts is evidenced by the decrease, a drastic decrease in the net NPA percentage itself. Suppose if you take net NPA of public sector banks, it was 8.8% in 2018, and it has come down by 75% reduction, and it has come down to 2%. What it indicates, the one is write-off, the other one is here. In case of net NPA accounts, the reason is provisioning. The provisioning which was about, if you take when the present government has come to the power in 2014, the provision coverage ratio was about 46%. Today, the public sector banks are having a provision of about 86%. So many lakhs of crores were provided as a provision, which led to the reduction in the net NPA. But that is the bank's money. The profits were diverted towards the provision. And if we have to, for that, we have to focus and recover the amount. No doubt, in the past 3 to 4, 5 years, from 2016-17 onwards, there is a lot of focus by the banks for recovery of write-off of accounts also. So in the last 5 years, there is a recovery of 1.25 lakh crores in the write-off accounts also. However, a lot has to be done, a long way to go to actual reduction of the stressed assets in the banking industry. So with this introduction, I will start my presentation. As you are aware that in income recognition asset classification as per the classification norms, an account, term loan account, is classified as a NPA. NPA if the installment or principal is overdue for 90 days, and CCOD account remains out of order for a period of 90 days, or outstanding balance is continuously in excess of limit or DP. An account is out of order when it is in excess of limit or DP. Outstanding is less than the limit or DP, but no credits for a period of 90 days, previous 90 days. Credit not enough to cover the interest debited for the period previous 90 days. Here there is a change in the definition, because earlier the Reserve Bank of India definition is 90 days from the date of balance sheet. In fact, we as a bankers, when the Reserve Bank of India asked us to identify on day-to-day basis, real-time basis, so many times the bankers have taken up with the Reserve Bank of India. As per the previous definition, 90 days from the balance sheet date, the bankers are not in order to classify the running accounts on day-to-day basis, but the Reserve Bank of India was insisting as all the accounts have to be classified on the real-time basis. In the recent last year, or this year beginning or the last year, they have come out with this modification of for the clarity purpose for the period of previous 90 days instead of 90 days from the balance sheet. So as far as the bills are concerned, it is here also overdue for a period of 90 days. It is treated as a NPA account. And agriculture loans, if they are installment basis and allied activities, they will be the same definition will be applicable. If the source of repayment is the crops, then the account will become NPA depending upon the duration of the